Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracey Ryniec, and this week I'm going solo again to talk about 3 stocks that are actually breaking out amidst all the carnage that's going out there in March of 2025 as the tariffs have now come on against Mexico and Canada. And they have been increased against China, and we'll see what else is going on. But the market hasn't liked any of this. So people are selling now, asking questions later, except on a few stocks that have been out there flying under the radar. And these 3 are just a few of those. How do I find these? You can screen for these types of stocks on Zacks.com. You can screen for stocks at 100% of their, most recent price, or you can do something that's a little bit easier because it's hard to get it right at the very tippy top. And I usually do about 5% of the recent highs. And that gives you a nice number of names. But I didn't even need to do that for this podcast because I have a couple of these stocks that are breaking out in my own portfolios here at Zacks. One is in the value investor, one is in the insider trader, and then the other one is just well known, and it was on all the financial media that it recently hit new all-time highs too. And it is one of the big cap, the $1 trillion stocks, but not in the Mag 7. So the Mag 7 stocks have mostly all pulled back off their recent highs. Some are down more than others. Could be somewhat of a buying opportunity in some of those names. And I'll probably take a look at some of those as we move along here this spring. And, check out to see if there are any deals among the Mag 7. But this other stock, which is one I'm going to start with, why not? Let's start with it, is the one that is a mega cap. It is Berkshire Hathaway, ticker brk.a, if you've got a lot of money, but most of us don't. And brk.b is what we have on Zacks.com. Some of the other sites do like a little dash B. I don't know why they didn't just get brk.b and brk.a without the dots and the dashes. It's something weird going back a while, but keep that in mind. Usually if you just start putting in brk, the tickers, both A's and B's show up. So we're going to take a look at the B shares because that's what all of us can own. Berkshire Hathaway, Warren Buffett's conglomerate in Omaha. It is in just about every area of the economy. So it is going to get hit by the tariffs. Why is it still breaking out? Well, he has been hoarding his cash. He's been selling those Apple shares over 2024 and now is sitting on over $300 billion in cash. Everybody's been kind of waiting. What is he going to do with it? Why isn't he deploying it? He has invested it into treasuries, so he is getting a nice return, 4 to 5% on it anyways, just to sit there. Nothing wrong with that. So his cash hoard keeps growing every quarter. Additionally, the stocks that he still does own are creating dividends, and some of the companies in the Berkshire Hathaway portfolio, because remember, they own companies like the BNSF Railroad outright. Some of those are generating free cash flow too, and that's going also back into the coffers, so to speak. Now, they do have a share buyback plan in place, but they haven't been deploying it because as the shares have been breaking out, they've gotten more expensive. So Buffett has always said he will buy Berkshire Hathaway shares when he thinks that they are attractive and have a good valuation, because after all, he is a value investor. So it's a little bit dubious that he's not buying right here. He's got all that cash, but the stock is a bit stretched even as it breaks out. Let's take a look at one of the charts on Zacks.com. My favorite, price consensus and surprise. It recently did report earnings. It's got this big surprise here, 51%. but very few analysts actually cover Berkshire Hathaway. That might seem strange. It's in the news all the time. It's Warren Buffett. It's one of the $1 trillion market cap companies, but because it's a conglomerate, it doesn't really fit into any niche. So if you are an expert on insurance, you might want to cover it, but then you'd also have to know something about a railroad because, again, they own BNSF. You might have to know a lot about energy. They have a lot of energy exposure in oil and natural gas. And even just down the line, See's Candy, Dairy Queen, Benjamin Moore Paints. These are all just very different industries. Clayton Homes on the home side, they bought a share in a family-run auto dealership, kind of like a Penske or one of those companies. I'm thinking of, can't think of the other names. But those are all part of the Berkshire Hathaway portfolio. So if you are an analyst trying to cover this company, it's just extremely difficult to get a handle on where earnings are going to go, what's happening amidst many of these companies, unless Buffett reveals something in either the quarterly reports or the annual shareholder meeting. So, we don't have that much coverage. I think we only have like a couple of analysts, one or two on it here at Zacks. So the beat and miss is a little bit erratic with Berkshire Hathaway as a result. But taking a look here at my favorite chart, they did have that big beat last quarter, and you can see the earnings consensus. It is kind of all over the place because we don't have that many analysts on it. And you can see this lighter blue line, maybe you can't even see it. It's right on top of the 2024. And so not much earnings growth expected here in 2025. And then 2026, we see a big step up. Let's look at the detailed estimates real quick, just to get a handle on what's going on. We only have, on the sales side, we just have this one estimate. And we're only expected 1% growth this year, 3% for next year. It's never been a big grower, or at least in recent years as it's gotten so big. But here, earnings decline of 7% for 2025, and then a rebound of 13%, which you could kind of see on that chart. Although it's not even really reflecting the earnings decline so much. It looked like it was just going to be flat compared to 2024. But people didn't care. The stock has been busting out. Let's look at this little price and earnings surprise chart. You can see the breakout here in 2025 as it surges. And for 2025, it's up 9.5% here. And even here at the end of February, just to start March, while everything else is selling off, it was hitting a new all-time high for the stock. Here's the 1-year chart on this little chart, it's a good visual, I feel, because you can really see the breakout there. It was moving sideways for a lot of last year, the second half of the year, and now we're in this breakout mode again. But what was I talking about it being a little bit pricey here? Here's the PE over here in this column, 25 times now. That is very expensive for Berkshire Hathaway. It was trading in the low 20s before this recent breakout. The growth isn't really there for 25 times. And we can see that in the PEG ratio, which is at 3.58. That's not very low either, and certainly not a value. I'm going to take a look at the financial overview real quick. That's on a link on the left side of Zacks.com on the quote page. And this gives just like a very good quick look at everything. And you can see there's the PE and the PEG, but price to book is at 1.69. And that is a value price to book. Price to sales is at 2.96, and that isn't a value for price to sales, which is under 1. That's when we're getting 70 cents on the dollar for the sales. Here, we're paying almost $3 for every $1 worth of the sales. Now, is Berkshire Hathaway worth it? Is it worth the premium? right now the stock market is saying yes. And maybe people are in it for the insurance side. A lot of the other insurance stocks are remaining very elevated here, as long as they're not in some of the healthcare, like UNH, which recently saw the sell off. But property and casualty has been a lot stronger, even with things going on in that market, like the fires and the hurricanes. So Berkshire Hathaway kind of, fits that bill of the safety play. And so everybody's piling in. This is one hitting those new highs and up on the year. So Berkshire Hathaway, brk.b. Okay, then we're going to switch over to one that is much more in the insurance realm, Aon. This is the one I own in Zacks Insider Trader. You can see it's a Zacks number 3 here. They did report earnings already. We're scrolling down. And they did beat last quarter. It was a 4% beat. Aon is one that is just kind of consistent, doesn't have big beats, doesn't have big misses, but you can see quite a few number of misses in 2023, 2024, which is when we ended up buying it for the insider portfolio. The shares were going nowhere for this long period, going all the way back to 2021, just kind of trading up, down, up, down. So we took a chance when the insiders did, and now we do have the breakout. While the other chaos is going on about the tariffs, Aon has been hitting new all-time highs while everything else was selling off. So this is very impressive given the market sentiment. And you can see the breakout on the chart now, the 5-year breakout. Year to date, the shares are now up 12.8%. So that's a nice little gain there, as the S&P is now down on the year here in 2025. So what is going on? Aon is insurance, but they call themselves professional services on insurance, global risk consulting. They have a wealth solutions division. They have reinsurance as well. So all these things banding together. In 2024, they had tremendous free cash flows, $2.8 billion in free cash flow. 2025, they are expecting similar bullishness on the free cash flow. They have a $1 billion share repurchase program going. You can see here on the quote page, they do have a dividend yielding just 0.66 here, because as the stock is breaking out, now the dividend is a little bit lower, but they do have those share repurchase programs. So I like that combination, because if the shares were to pull back, then hopefully the company's going in to get, more at the lower price. Now we can see on the price to consensus chart on this, with the surprise that it looks a lot different than Berkshire Hathaway. More people covering this company, and up and to the right now is what we're seeing. 2025, nice little earnings growth there, and on 2026. You see a little bit of weakness here from the last earnings report. So a few estimates are probably coming down, but not by much, because scrolling down, we have this great new little chart on the quote page, sales and EPS growth rates year over year. And now we have 2024 in the books. Lots of green on this chart here. And 2025 expecting another double digit on both sales and earnings, 10% for both of those. 2026, a little more of a slowdown, but still on earnings expecting 12.5% on earnings growth for 2026. That's what's reflected in that chart with those nice big bands in between the lines on the consensus there. So what about PE on this one? Trading at 23.8 times, but it does have this double digit. So I am liking Aon here. It is kind of a stealth stock. It is one of those what I consider to be quote unquote boring areas, but sometimes when the chaos is breaking up out there in the stock market on Wall Street, it pays to be in these more staid and, yes, boring type of companies, just going about their business and making a lot of free cash flow while they're doing it. So that's Aon, ticker AON. Okay, then we're getting off of insurance and that area, and we're going to big pharma, another company that's busting out right now, while everything else is not, is AbbVie, the big pharmaceutical company headquartered in suburban Chicago. Ticker A as in Adam, B as in boy, B as in boy, V as in Victor. ABBV. And AbbVie was famous for Humira. It had the patent on that product for several decades. It made billions and billions of dollars, but finally the patent was coming off in 2023. So leading up to that, in the 5, 6, 7 years, even a decade out before 2023, when everyone knew it was going to go away, and then generics could be made on this blockbuster drug, which brought in billions of dollars a year, investors got nervous. Stock market got nervous. How are they going to replace that? But the AbbVie management has done it. They have found other drugs within their pipeline. They have bought other companies to get their drugs to replace the Humira in their revenue, and it looks pretty good here. Now, I am an AbbVie shareholder long term. I bought years ago. I also own it in the value investor. It has been quite the challenge to own the stock. It was, moving sideways for a number of years as people doubted whether or not Humira could be replaced. Now, what did happen to Humira's revenue last year when the patent finally did come off? Yes, the generics were rolled out. Yes, they are losing market share, because why would you buy the more expensive drug when you can buy the generic? So last year, took a look, and revenue for Humira down to about $9 billion. It is expected to drop another like 50% here in 2025 as, again, more people just take the generics. And as those are rolled out by other companies, then they're going to have a lot of choices. So the price will come down and they will, buy those cheaper drugs. But they have two bigger drugs that are replacing it now. And both of these because we've all heard the commercials. So the first one is Skyrizi. Yes, Skyrizi is an AbbVie drug. They had $11.8 billion in revenue with it in 2024. So again, Humira down to $9 billion, but Skyrizi at 11.8. And then Rinvoq. You've heard that one too. Also probably on a TV commercial. Rinvoq at about $6 billion in 2024. And in addition, they have a whole Botox fillers business, which has been a little bit more sedate recently. I've always loved AbbVie because they did buy Allergan, which owns Botox, and Restylane, I believe. But certainly Botox, and it is in their kind of wellness category, face and wellness categories. And that has struggled recently. People aren't buying as much Botox, apparently, but it's looking like that may be turning around a bit here in 2025, so they could get that rolling again on the beauty side of their business. What they didn't have was weight loss drug. That's Eli Lilly and others. But they recently announced that they were in a licensing agreement with someone with one of those drugs in that category. So I'm liking everything AbbVie's doing. So is the street. Let's take a look at what is happening with the breakout here. So the price consensus and surprise. You can see they beat every quarter. I'm loving that. But that's not why we're owning it. We're owning it for this earnings growth. Now, take a look at what has happened here. So 2022, that's before the patent expired. Look what happened with earnings. Everything was great. And then the doom of 2023, it did, slide dramatically there. And then 2024, it seemed to have basically stabilized, let's call it that, at this lower level. But look at 2025. Expected to be up quite a bit. And then again in 2026, analysts very bullish about 2026. And looking down at that sales EPS growth, that nice little chart, you can see the struggles. Going back 2023, earnings down 19%, revenues down 6.4%. And then 2024 trying to turn around, but earnings still down 8.9%. But here, look at the estimates for 2025, a rebound, 21% gain on earnings, 2026, 13% gain. And these shares had always been cheaper because the street, just too much uncertainty. We're not believing in it. And the stock, again, pretty much went nowhere. Looking back up at this chart, you can see during the key 2022 with the doom of 23 coming. And then even in 2023, as everyone waited to see how it would play out, it went sideways. I guess to its credit, it didn't fall here, but it was coming from these lower levels during the pandemic way back in 2020. But now a little more certainty on what's happening now that, the patent is off, these other drugs are rolling out, and revenue is rebounding. So, it's busting out. How much is it up year to date? Up 18%. While everything else is going the other way, AbbVie is up. And then you can see it is always been shareholder friendly. They have nice free cash flows, even getting rid of Humira. Dividend is still yielding 3.1%. During the darker times when no one knew if they could replace Humira, it was yielding a higher yield there, closer to 5% at one point. They were paying the investors to stick around and, see if they could actually do it. And it looks like they are. So forward PE is at 17.2 now. Yes, it's been cheaper in the past, but I like those earnings rising. So that's a good sign. PEG of 1.4. So not real high on the PEG. It's not a value here, but not as high as what we've saw with Berkshire Hathaway, trading at almost 3 there or over 3 on the PEG. So AbbVie, another one that is kind of off a lot of people's radar, as a lot of these big pharmaceutical stocks are. Some of them are going the other way, though, not breaking out, like Merck, ticker MRK, has been hitting 52-week lows. So it's not in the breakout category. So do your homework, look around. You can run the screen to find these stocks. I just happen to own a couple of them. So that's why I've been noticing, while everything else is in the red, these, really breakout key big cap stocks are really holding it together. And, they're kind of stealthy, maybe other than Berkshire Hathaway, but not many people talking about AbbVie right now or Aon. And really not many even talking about Berkshire either, because, when you're breaking out, maybe you don't get the spotlight quite as much as the chaos of the breakdown. But I like to get stocks that have the momentum. So it's been fun to find some. Everything is not doom and gloom right now. So take a look at some of these stocks that are bucking the trend, because odds are they probably have a pretty good Zacks rank, and those earnings are probably on the rise for this year and next year. And they're probably not real big in the tariff plays. And so even though Berkshire definitely has exposure to the tariffs, but insurance not as exposed, and then drugs maybe not quite as exposed either. But I'll be watching these as we move along here this spring. And just to recap the stock tickers again: Berkshire, brk.b, Aon, AON as in Nancy, and AbbVie, ABBV as in Victor. That's a tongue twister one. A as in Adam, B as in boy, B as in boy, V as in Victor. And as always, I aim to bring you many stocks as I can. And I'm going to be taking a look at those Mag 7s. If the sell-off continues, we're going to see some deals there. I covered which stocks in the Mag 7s I would buy for 2025 just a couple of months ago. How are those doing? Have I changed my mind? Maybe there's some new stocks in the Mag 7 that look real attractive after this sell-off. So I'll be bringing you all of this and more. I'm going to have Dr. Blank on, John Blank, our chief equity strategist and our economist here at Zacks, to talk about everything going on in the economy and what stocks he's looking at as we move along here this spring. And I will bring back Mark Zinski, our small cap analyst here at Zacks, with some more small caps, because those were the place we were supposed to be here in 2025. But the small caps are the weakest of the big major indexes, down almost into double digits here, even just in the last month. But you know what that means? There could be some deals. So I'll have Mark on as well. Be sure to subscribe to get all of our podcasts. Get us on YouTube. We're on Zacks.com/YouTube, where you can subscribe on Zacks Investment Research. That's our channel over there. And get our video podcast so you can see all these charts that I'm showing, as well as whatever other data I'm giving you, the little charts on the sales and earnings as well, all of it on Zacks.com. But be sure to get us somewhere, and I'll be back next week with some more stocks.